Welcome to our end of November market update. Hope everyone's had a great fall, and we are back doing our market updates. Brandon recently, him and his wife had a baby, so we took a little bit of time off.
A little bit of time off, not a lot of sleep.
Not a lot of sleep.
Yeah, but we had a baby girl end of September, so super excited about it. But let's dive into the market. Craig, what is going on?
Yes, I just looked at the MLS, and we have 9,030 homes in the MLS. That is single-family homes in Maricopa County. That is up from over the past few months. Last summer, we were looking at around 6,000, 7,000 homes. So it's definitely trended upwards. We are in a little seasonality slowdown right now, which is normal. So right now, active listings, their average days on market are 85 days on the market. Sold listings, that means homes that have sold, they're under contract, they had an average of 57 days on market.
It's a huge disparity.
It's a huge disparity.
Yeah.
And just thinking about that brings to my mind that most likely those 57 days on market, those homes were priced right. They showed well. There was probably a little deferred maintenance that needed to be done. They had great home inspections, or they worked out the issues with the seller and a buyer that wanted the home. The 85 days on market, we're probably looking at homes that are maybe a little overpriced. Maybe they have some deferred maintenance that needs to be done. What I take away from that is, if you're thinking of selling your home, really you need to look at pricing the home right, what needs to be done. Maybe do some of that deferred maintenance before you get under contract. Brandon and I were just talking before we started this morning that we're seeing cancellations due to home inspection.
Not only that, obviously the home inspection is a big portion of it, and we're seeing some major things come up on home inspections. Couple that with interest rates. So you're seeing interest rates, obviously at higher levels, but which we'll kind of get into what rates are doing. But if you add those two together, obviously that's a driving factor in a lot of the cancellations going on.
As you're considering selling your home, that's something you just really want to think about. Like, how can I position my home? Because it's a product. So you want that product to be show ready, no deferred maintenance or very little, and you want to have that home inspection is going to be clean or as clean as possible. Before we get into rates, I want to talk about new homes. So recently, just yesterday, I sold a new home, and I was impressed with the builder. It was in the East Valley, huge incentives. We're talking anywhere from $17,000 to $25,000 in incentives to be used for rate buydowns, closing costs, etc., and reduction of the price of the home. They're willing to negotiate, a lot of these builders. So if you're looking to live in the outskirts of town, the West Valley, East Valley, there are some really good opportunities to take advantage of it. Don't forget about new homes as you're looking for your home search.
And you can use those incentives too towards rate buydowns. So we're seeing a lot of clients are coming to us seeing if we can match like builder incentives, which we obviously cannot do. We're seeing rates as low as like 5.99% in this market right now. Oh. So you're saving a substantial amount of money. Right. Obviously, inventory is semi-limited, and you're limited more to the kind of like outskirts. Of areas. So.
Absolutely, yes. So it doesn't work for everybody, but it's a good alternative to consider when you're out home searching. Let's talk about interest rates. We brought it up a couple times this morning, and what's happening?
So for the first time in like a year, we are seeing some positive momentum in rates. So we've got on here for probably a year talking about how rates continue to trend upward, but hopefully we're starting to see the opposite trend. So we're seeing inflation continue to cool. CPI came in last week. We have PCE this week. Hopefully we get some good signs of movement there. Couple that with the jobs reports. So the jobs reports, generally speaking, when we have poorer economic conditions, mortgage rates go down. So we're seeing less job gain, which is big from a mortgage rate standpoint. So the Fed's seen this and they've decided not to raise rates again. And with that, we think that they'll probably pause for the near future. The outlook next year is that they're predicting around 3 rate cuts. So that's the current condition. And obviously a lot of that can change and fluctuate based on the data that continues to come in. So good sign from a mortgage rate perspective. We've seen them fall back when they were over 8% all the way down into the low 7s. So We've seen some really good movement on average from a mortgage rate perspective, which allows home buyers, especially in this season when you can actually find a deal, in my opinion, like during this season, if you have a seller, they're needing to sell the home. Right. The buyer don't necessarily want to move in during the holidays, but you can get a good deal. And with mortgage rates falling, obviously if that trend continues, we're going to see demand skyrocket, and you're going to be back in that position to where you're offering way over.
So with this lower interest rate that we've seen now for the past couple of weeks, are your contracts that you're seeing as a lender, are they still a lot of seller concessions to help?
We're still seeing seller concessions. Good. Obviously, if you look at the days on market, demand is still lower than normal. So you're still able to negotiate a lot of these seller concessions. We're still seeing those temporary buy downs, permanent buy downs covering the bulk of the closing costs. So we're seeing a good amount, I would say close to 50% of our accepted contracts that have those seller concessions available. And I mean, that's all I got. You got anything else for us?
That's all I've got. Happy holidays, everybody. We'll be back next month.
Yep.
Hopefully more interest rate cuts.
Let's hope.
Okay.